Hello, everyone. Happy Wednesday. This is Simon with AvaTrade. Welcome to our weekly webinar, Interactive Trading Conversations. Welcome, everyone, to our webinar, Interactive Trading Conversations. This is Simon, account manager with AvaTrade, and let's start. Let's have some fun. Few things about myself. I see some new faces here. Of course, special welcome is to new people, so I'll introduce myself really quick. As I said, my name is Simon Friedman. I'm a senior account manager with AvaTrade, and I got involved with trading as a prop trader back in 2000, June of 2000. I started as a prop trader on Wall Street. I did it for about 11 years, and after that, I moved on, as I like to say, in a less stressful way of trading. And I started also at that time to mentor and educate traders. And at this point, I'm very happy to have this great opportunity to be assisting our customers at AvaTrade. The agenda of the webinar, simple. The regulars, you know the drill. You just type your questions the same way you did a great job typing, confirming that you could hear and see me in the same window. You just type your question about specific market, specific instrument, specific asset. We'll discuss it, we'll analyze it. We'll take a look at the chart technically. As I always say, I cover a lot of markets, so if I know any specifics as far as fundamentals, I'll be happy to share with you, okay? Risk warning, you can find the full statement at avatrade.com website. Everything we do here, it's purely educational. Of course, we do not suggest any trades. Social media channels. Please feel free to subscribe and follow us on Telegram, X, and as I like to say, usually my favorite YouTube channel, where you can find a lot of information, educational material, tutorials. You can find all the webinars that we do are being posted. You might be even watching this webinar on YouTube. So if you are, don't forget to click the likes if you like it, of course, and feel free to write your comments, and definitely don't forget to subscribe and to click on that bell so you've been notified. Also, very important, a lot of people will be watching this on YouTube. So as I always say, guys, let's have a lot of questions today. Sometimes you feel like a shy crowd and you're hesitating for some reason to ask questions. So let's have a lot. Think about people that are not able to ask those questions. And those are people that will be watching this in recording format on YouTube, okay? I think we are ready to start. So here we go. We're gonna bring the trading platform, and guys, I'm ready for questions. You can ask multiple questions. Start with one. Feel free. Again, all you have to do, just think of the market. Could be specific equity shares. It could be commodity. It could be index. Could be anything, and we'll be happy to discuss. Eric, thank you for starting. Our regular supporter, Eric, is here. Oil has been up and down this past week. I know there's a Chinese, etc. You already know what I'm going to say, right? Talk about Chinese. So I'm continue reading. I know there's Chinese, etc. Do you think it will settle down soon, maybe around 75? Oil, it's been doing the same thing. It shows a lot of weakness. And unfortunately, we know that the war in the Middle East is still there. Things are not stopping there, sadly. And oil doesn't care about that. So the supply fear is really absent. It's not there. The usual scenario when things are hot in the Middle East, you would see fear of shortage of supply, and oil usually runs up. Currently, it's not happening. Take a look. We've been making steady lower highs, 1, 2, 3, and we really trying to step down. We're also holding the 66 area. We haven't been able to penetrate it yet. Now, also at the same time, as you could see, we also making higher lows. So it's a lot of indecision there. And China, as you mentioned yourself, is also where the huge move up. Oil reacted to it, but not as strong as China did. Then we sold in 2 days. We give away 50% of that move, and we're sitting steady. We had fewer times to run. First down, we held the 61% retracement. Then we were sitting at 50. Last week we broke in 1 day to 38, back under 50. So we still at the same area at around 50% retracement from all this huge move that happened in 2 weeks' time and got erased half of it in 2 days. So we need to see what happens. Also, now it's the new thing. We have Trump as a president, and one of his slogans, drill, drill, drill. So a lot of drilling, a lot of oil coming that would dilute the or increase the supply and dilute the price potentially as well. So maybe that also is one of the reasons why oil is so weak. So again, just to put it all together, you have on the demand, China is not doing that great. Global U.S. markets are running up. How real that is, I guess we're going to find out soon. And on the supply, we're about to start a lot of drilling in the States, being directed by Trump. And on the positive side, which is a negative war, normally would be positive for oil. It's not affecting it in oil in a positive way. So that's why it's really, as you could see, making lower highs at the same time higher lows. So we're squeezing somewhere. Let's see the weekly charts. You could see it's being squeezed. But on the weekly chart, you could see the latest big candle here, and the rest of them are trading within a lower half of it. So that's not very bullish if you try to analyze that. Okay, good question, Eric. Guys, please, let's have questions. I said a few times, I'll repeat again. I don't want to play dentist and pull your teeth with questions. We have a nice crowd. People are still coming in, I see. So again, if you missed the explanation, what we do here, we answer or discuss markets, commodities, currencies, stocks, indices, whatever it is, we can discuss together and try to understand things. Okay, Seun is asking, again, I apologize if I mispronounce your name. Hi, Simon, which of the currency pairs with the USD is the denominator and ready to drive the strength of weakness of currency movement, or which will always be inversely proportional to the vice versa? Example, Euro USD, will Euro strengthen make the pair go up? US, it's weak. It's a good question. I'll make it very simple for you. If you're mentioning Euro dollar, see, currently as we speak, this is live market. Euro is really selling here. So, as you know, dollar is the most used currency. All the commodities in the world, most of them are being traded in US dollars. So if you take any pair, dollar plays a big role there, right? If you again, it's just my opinion. I could be 100% wrong, but I think the way it works, even there's nothing specific coming from Europe. There's no changes in market, equity markets, no changes in interest rate or anything else. But if you see strength with the US dollar, you will see the pair going down. And we can see, take a look at this chart. So if we take dollar index, it's exactly the mirror image of that. So if you take a look currently at euro dollar, most likely the move is being caused by the US dollar moving higher, right? Take a look. We had the CPI number today, and since then we had the initial reaction on the dollar. This is it right here. 2:30 GMT came in, I think. 1:30. Initial move down, and then we've been just flying higher, right? So any pair you take pound dollar as well. Pound's been selling now. So here also you see pound dollar, British pound dollar is also going down, and it is also due to the strength in the US dollar mostly. Okay, there will be time, of course, that there's nothing specific happening in the US dollar and you have interest rate decision. For instance, I think last time we had the decision was in the same day. We had Bank of England cutting first, and then and then the Feds cut right after that. So both of them cut the same day and the same percentage, 0.25, and both of them are currently at 4.75. So that's why they call them majors, because they have power, and I think dollar has more power as far as decision making or direction making. Okay, I hope that that helps clarifying your question. Good question, thank you. Okay. Firtak is asking, or I guess the first name is Victor. Again, I apologize. Are there often market traps on currencies or commodities? It's when small money pushes the price, hit the stop loss, or retail trades, even though the general prediction was correct. Absolutely right. You and I and gazillions of other retail traders, we're just small fish for the big whales in the market, for the banks, hedge funds, and big entities, people with billions of dollars, trillions of dollars. So there are a lot of traps, and they happen a lot. And our job is to stay away from it, or if we've actually got into the trap, to realize it and swim for safety. It's very, very, very important. Let's just try to get an example. If we take Russell, here we go. Russell 2000. Last week he made, I think, 8% move to the upside. If you take weekly charts, take a look at the huge move, right? So see what happens here. We came to the previous level of resistance. So a lot of people had stops here, right? People that sold short, or people also had entries on the breakout. Depends what your style of trading is. So big money, as you mentioned, they know these things. They know these traps, and they're looking for these things. If they were looking to short, they're not going to just sell it because they're going to drop the price. With they're not trading one contract. They're trading thousands of contracts. So if you put in the market thousands of contracts of any index, it's going to create a huge move to the downside, like probably it did here for some reason. I'm just speculating. So they are looking for these things where they can use liquidity that you and I are providing with our stops and buy and sell orders and so on. Like here, the opposite. You see the tails. We had a resistance right here on this level, 2008. 1, 2, 3, triple top. Then we broke through it, right? So everybody got excited. Again, I'm just translating what it says on the chart. So everybody got excited. They got in, and they put the stop right below. So look what they did. Before they ran it higher, they shook everybody out, tails up and down, get everybody paralyzed and tired and spitting and cursing and bleeding and sweating. And then they took it higher. Now, then people entered again. I love this market because it does it. I mean, of course, it's easy. If I knew that was happening before, I would be making millions of dollars, right? But I'm not. So, but looking at the historical chart here, it makes sense. You see, then we broke again to the upside. Everybody said, okay, there was a, a fake out. I'm going to get in now, and I'm not going to get out. And then it comes again at the tail, even lower than the previous one. It shakes all the losers, all the people that trying to catch. Excuse me, trying to catch a quick buck. And then the moment it shook everybody on the high volume, you see the volume here, super high. And then when they shook everybody, they don't like us. You see, they love us for liquidity, but they don't like to share the profits. So the move up, they just want to ride that wave alone. They don't want us small servers. They want professionals just running it. So that's the beauty. So our job is to realize that, right? Some people actually understanding it, and they're not getting in here. They're actually getting on those tails, so they get a much better price. And what's the beauty of that tail? This is a weekly chart, by the way. I'm just showing it just for illustration. So the beauty of that tail, that if you get in on the limit order somewhere in the nice area, you're getting into the profit area very, very quick. So you don't need to wait till the shakeout. But again, that's the ideal scenario. You can never know when is the ideal entry, because sometimes it doesn't wait. Sometimes it just goes up, and then, as they say, you're screwed either way, right? If you get in, you get shaken out. And if you don't get in, it can run without you. So, and sometimes the Murphy's law works not in your advantage, but nothing you can do. You have to try. You have to try maybe on different size. But the idea is you have to be prepared for the multiple shakeouts. And that's why the money management and the risk management, it's a very important part for traders. Okay. Great question. I appreciate that. It triggered my excitement. So that's your question, Victor. Moshaka is asking, hi Simon, what are your thoughts on gold? How long will it go? First of all, it's not going anymore. It's sitting now around 2,600. It's been going a lot. As you know, gold moved a lot, especially this year. And it's a second week that we're selling. This is the daily chart, which just broke to the previous resistance. Take a look. We're already turning pretty much into the bearish trend. You could say that. So, see, the big move started when the election happened. We've been holding very nicely there, made recent highs around 2,800, and then the elections came, really sold, and we continuing. So, you see, gold and regular people forgive me for saying the same thing, but I cannot invent anything else. Gold has few qualities, few jobs, or few hats it's wearing. It has inflational job. It goes in the opposite direction of dollar sometimes, and also has a safe haven job or title. That when there's a risk of the market is not moving, it's selling, then the money goes into gold to safe parking, right? So the moment things turn around, in this case, the market ran up. We just made a fresh highs in the market right after the election. So the gold holders said, no, why? Money needs to make money. So they say, okay, it looks like the risk on is back. Trump is back or is coming back in January. New policies, market running. Let me make quick money instead of sitting in in gold. So that's what it's been going up and down. Risk on or bull market, the gold is selling. A bear market, the gold is running up. So that's something to take into consideration. Good question. Next question. Oh, Victor's asking, how can we avoid the trap? There's only one solution. You don't trade. You just close the shop and you don't trade. You can't really avoid it. If it was avoidable, it would create a big threat to those big pockets. They know how to operate. They have geniuses there, people with the Ivy League, traders with a lot of experience. They have robots doing it. They also buy data. Some entities, some software companies that provide all kind of software for. Actually, I learned this recently. Yesterday, I was watching somebody's on YouTube, and he's involved in some software projects for traders, and he's making money by selling data to these big banks, not personal data of your name and your private information, but your trading behavior and other things. So they get that pool of data, they load it into their highly efficient and smart machines, and today with the AI, I think it's getting even easier. So they collect all the behavior of traders and timing and everything else, and that's how they're able to manipulate the market. So your question has a very simple answer. If you want to avoid getting trapped in trading, you should avoid trading. But I guess you do like trading, so you just have to calculate. You can't predict what those guys are going to be doing. But let's say if you kind of think that you'll be trapped 2, 3 times, 4 times, so you enter with the position that you can afford it. You don't go with the whole full position that you have. For instance, if your max position is 1 lot of whatever it is, so if you're going to get in with the full position and get shaken 3 times in a row, it's going to be a big loss. But if you break that and try to tear in with a small size and test the market and enter again when it gives you a little bit of confirmation, you'll be better off. But there are few things you can do, but you can't really avoid it. You can't avoid it. They read us. It's hard for us to read them, but some are succeeding partially. Again, there's no trader out there that you can totally predict that those liquidity traps. No way. All right. Very good, guys. We're doing well. We are progressing. We have more time, and I was hoping that we have questions piled up. So let's make it happen. Again, remember about those people that are going to be watching us on YouTube. They're not able to ask questions, so we have to help them by asking questions here so they can listen to it and listen to the answers. All right, guys? Again, it's very simple. If we don't have questions, we're going to wrap it up, which is also fine. But it would be much better if we have questions. Okay, great. Sean Elias, seasonality. Would you expect natural gas to continue upside? Now, what is winter season in all household? Beautiful question. And if it was just so logical, everybody would be a millionaire. Elias Sean is asking here, the winter season and all household will turn on the heating system to warm the house and office. Beautiful, but there's a contradiction. If you take natural gas, which is suffering now, I believe between $2.50 and $3. Yeah, here we go. You see, if you take historical things, it actually does the opposite. And if you've been here for a long time, I have found a very interesting idea here. Eric knows, and a few other people that are regulars here, that I found a 4-year cycle here. Take a look. March 2016, April, March 2020, and March, April 2024. 4 years apart. And the bull market started actually in the spring, going into the summer and peaking at the end of the year, December, when you would say, yeah, the winter is coming, they should be using. And then it cooled down again, right? And then guess what? March it went up again. So it's not so logical. Maybe they're following their own seasonality there. But take a look, the same thing here. I'm not lying to you. Take a look what the big move started. After the initial move in April, the big move started in July. July, August, all the way to November, then corrected itself, waited for the spring, and guess what? April, huge move to the upside. So there is definitely seasonality, but I think seasonality is applying a lot. There's a great trader. His name is Jake Bernstein, and there's his teacher whose name I forgot. They talk about seasonality a lot, and seasonality works in a better, more solid way in grains, in wheat, corn, soybeans. Those guys are actually seasonality because what they do, they, they plant the grain, that they harvest it, and so on. So there, you actually have a real seasonality for those. Natural gas, its own thing, but as of now, you see, it's illogical. It's going up into the summer, selling into the winter, going up into the summer, selling into the winter, and so on. Good question. I appreciate your question, Sean, but it's just weird, and I'm sure you agree with me. And as far as what it's doing now, the new contract gapped right into the resistance. Then we closed the gap. I spoke about it in one of my webinars, and then we're testing the highs again. So there's a way to go. Take a look. It is trying to push through 3. And we've been making high lows, so to speak. So it could be breaking through 3, could be coming back to 220, could be anything. But as far as seasonality, it's a little bit different in natural gas for some mysterious reason. Good question. Thank you. Okay, how we doing? Do we have more questions, guys? We still have time. We still have energy. So let's do it. Going once, going twice. All right, so I guess no questions. I appreciate your participation. Thank you all for making an effort. We should be back next week. Have an amazing week. Control your risks, have a plan, and all the best.